Medieval goldsmiths in Europe would hold people's gold in vaults for safekeeping, and in return, they'd give you a receipt. People began to trade the receipts rather than the gold itself because that was safer. And the goldsmiths noticed something. Only a small fraction of people ever came back for the gold. So they started lending out some of the gold, or issuing more receipts than they had gold. This is the beginning of what's called fractal reserve banking. It just means lending more than you have. The Bank of England was established in 1694 and it started issuing paper money backed by gold. But they would still keep only a fraction of reserves in gold. The rest was out as loans, expanding the money supply. Fractal reserve banking has become a standard feature of commercial banking. And by the 19th century, banks were routinely creating credit money that was far beyond their reserves. Periodic bank runs, like a moment of crisis when everybody rushes to take their money out at once, led to central banks being able to step in as lenders of last resort. These days, modern banks don't even need to hold a fractal reserve of 10%. Instead, they just need to make basic capital requirements and keep some reserves enough to settle repayments. But the amount that they can lend is mostly shaped by confidence, your faith in borrowers and the financial system. It's still called fractal reserve banking, but it's more like credit money expansion under the rules of the central bank. Fractal reserve banking started out of convenience, but it's become a system of power. And today it explains how inequality has been able to spiral, because those who control credit decide who gets funding. One of the most powerful things that you can do right now is move your money and your mindset. If you're still with Barclays, why? But you don't need to be with any of the banks. You can join a local credit union or a community bank. In the UK, there's over 300 credit unions. These are member-owned. So profits go back to the members and into community projects. You today can take your money out of extractive finance and put it into a system that supports your community. If you're a teacher, a council worker, a union rep, or even a PTA, you can partner with an existing credit union to start a payroll savings scheme. This is already happening across NHS trusts, local councils, and housing associations. It's low effort, but it builds financial resistance and resilience for the whole workplace. And you can use your role to connect others to fair finance and start spreading control. This is about education, not expertise. Share the story, how money gets created by loans, and how moving to a local community bank or credit union keeps money circulating locally instead of being sent to war abroad. This will help us deprogram people who think that there is no alternative to capitalism. There is. It's called community wealth. What's up, Jay Friday?